Hey everybody, this is Jack Allwild with another money episode. Today we have a very special guest, Jeremy Davis. He is at cashquickinvestor.com and you can see his videos on YouTube at the Jeremy Davis. Jeremy, welcome to the show.
Hey, Jack. Great to be here. Thank you for having me.
So I heard you speak at the Private Money Club not so long ago, and it was a great presentation. I really enjoyed it. I think a lot of people can learn from your creative finance tactics. But before we get into what creative finance is, I'd like to take a step back and ask, what was your relationship with money growing up?
It's a good question. My relationship with money was being told not to answer the phone because it's more than likely a bill collector. My family, as much as I love my parents, my mom and my dad was never really a financially successful person. I think what happened was, going back in time, I'm 41 years old. And so some of you may remember the Y2K scare, where we all thought that when 1999 turned into the year 2000, things were going to go like haywire, right? Computers were going to crash. The whole world was going to just burn and stuff like that. And so leading up to that timeline in the 90s, my dad was doing a good amount of business, right? So he worked in computers, he worked in tech, but before that portion, he did terrible. And then after that portion, when Y2K was gone, he did terrible. So my life growing up was getting evicted and getting foreclosed on every house we lived in. So it was finally, we got evicted again. We got foreclosed on again in a property when I was a teenager. And I remember the bank sent a person to come help pack everything up. And so like she was seeing my living, like everything I was dealing with, and we were getting food donated to us from charity events and stuff. And so, I mean, even when I was a teenager, I sold weed, like whatever I can do to try to make some money. Like I'd go to school without any, I guess you would say, lunch money being handed to me. So I had to kind of fend for myself. I think that looking back at it now, I don't blame my parents at all for not being financially successful. In fact, I would see that as a blessing that at a very early age, at 15 years old, that I learned how to be an entrepreneur. So now fast forward, in my 20s, I had terrible credit. I had no idea how to money manage. Again, when you don't have, like, I'm jealous of Trump Jr. Okay. And let me tell you why I'm a hater of Trump Jr. and people like that. He will never be a financial failure because he has so many resources available to him. Even if he doesn't want to be an entrepreneur, he will never fail financially because he's got CPAs, he's got bookkeepers. There's so many people that are available to him every single day because of his father. And then to add to that, even if he wants to be an entrepreneur, for me, coming from a financial background or a family background that they literally have no idea how to pay bills, if I'm trying to be an entrepreneur, now I'm having to learn it from scratch, everything about it. So in my 20s, I didn't do that great. My later 20s, I started gaining back on my feet. I was making money. I was getting my credit fixed and stuff like that. And then, yeah, my 30s was up and up from there. Like I kind of gained stability by that point. So to kind of wrap back around to answer your question, growing up, my relationship with money was absolutely terrible. And so learning what I'm learning today, even about building a business and building multiple businesses, is learning from scratch.
You think like getting evicted, I mean, that like really like, hurts. Like, do you think that led partially to you getting into creative finance, to helping people kind of avoid these types of scenarios?
I mean, literally hitting the nail on the head. When you say that it hurts, at the time, I didn't really feel that pain. But looking back now, I remember the last property that we got evicted from. My parents, we packed everything into boxes that we could. We only had like a week to do so. And so we packed everything up and we put it into a moving truck, right? We hired a moving company, and my parents never paid the moving company. And so everything I don't know, it might've been auctioned off or it might've just been thrown away, but everything before the age of, I'd say 12 years old is gone. I have no family photos. I've got nothing from a childhood timeline. So everything up until teenage years and beyond, that was when I moved out, when my parents finally got evicted. I think when I was turning 18, I just took all my stuff, and that's when I moved out on my own.
So, okay, let's try to pep up the conversation a little. So
This is good. It's going to pep up. I'll tell you that right now, because to answer your question about like, did that get me into real estate and doing what I'm doing now? Yeah, that is why I have a huge passion in basically, like, my company has a slogan or a motto, which we don't let a house be taken by the bank. right? Like that's
Awesome.
kind of where our goal is right now is first and foremost offering value to families that are dealing with this kind of stuff. Like our goal is to help them work with the bank, help them figure out their finances, and we do that all for free. But on a side note, as a backup plan, if they do need to sell their property to get their equity, we just don't want the bank to foreclose. So
That's good.
yeah, there you go.
So, okay. So Jeremy, people are maybe still wondering, so what is creative finance?
Creative finance, I guess you could say the best definition of it is it's anything other than a conventional way to sell or buy a property, right? So we know there's really two conventional ways to sell or buy a property, right? You get a mortgage or you buy something with cash. Everything else outside of that little small bubble is creative finance. That would be seller finance, that would be options, that would be subject to, which we'll get into here in a little bit. But like basically a lot of different ways to buy properties that the encompassing term being creative is you're structuring the deal outside of a bank.
So you recently had a short on YouTube called 5 Things You Need to Know to Structure a Creative Finance Deal. And you subtly put in that you got your primary resident at a lot of people would think like impossible, like 0% interest for 10 years. Why don't you break down that deal for us?
Yeah. So what you're seeing in my background right now, this is my basement / studio. And then up above me is a 6-bed, 4-bath, about 3,300 square feet, built in 2010. This was a property that I purchased. The seller needed $60,000 down. And so because of that, I basically said to him, this deal was brought to me from a couple of wholesalers that they had the seller locked up under contract, but nobody was buying their deal. And if you don't know what a wholesaler is their job is to find and identify a property, get that property under contract, and then they sell that contract and make a profit on it, right? So they might buy it for 100, but then they'll sell it to an end buyer for 120, and they keep that $20,000 spread. So anyway, so a couple of wholesalers brought this deal to me, and they said, Jeremy, we've been trying to sell this deal, and nobody buys it. Nobody wants it. And we're 2 days left until the contract expires. We know you're the expert here in Utah. Would you be able to hop on a call with the seller and see if you can figure this out? So I'm looking at this and I'm like, this is a terrible deal. Like nobody would buy this. It was, I mean, they wanted $120,000 down. Basically, they structured it where they were going to be paying, I think like 5% interest, not only to the seller's equity, but an additional 5% interest to the underlying mortgage. So this seller was going to become a multi-millionaire by doing this deal with these two guys, right? But you can understand that nobody's going to buy this deal because it was structured so terribly. And again, that's what I've said in other reels. And when I teach some of my students, it's about learning how to underwrite will save you in the end, because if you structure it correctly, the deal's not going to fail. Right. So they come to me, I get on the phone with the seller, and I'm not, the wholesalers are not on that call. So I go to the seller and I go straight off the bat. I go, these guys have had you under contract for 28 days. Are you wanting to extend? And he goes, absolutely freaking not. Like, I'm done with these guys. These guys have wasted my time. I need to move to Germany because of work. He was in the military. And I've been sitting with my stuff in storage for the past month. I've been waiting to move. I can't sign any documents. I can't go to Germany because I have to make this deal go through. So no, I don't want to work with these guys. And I said, well, would you want to work with me if I can give you everything and we can close in about a week? Then he goes, yes. And I go, okay, well, first I got to ask a question. Why do you need $120,000 down? And he goes, I don't. They just offered it. Okay. I'm like, okay. I'm like, all right. So what do you need? And he says, I need $60,000 down minimum. My dad just got diagnosed with cancer. I want to buy him a vehicle and I want to pay for his treatment before I go off to Germany. I want to make sure my father is taken care of. And I said, great. I'm going to get you $60,000 in the next week. Now, the question is, do you want to sell this property as a cash offer? Meaning I'll just come in and I'll buy it all with cash. You get 60,000 plus you get all your additional equity. Or do you want to sell it subject to? And he goes, what's subject to? And I go, well, basically subject to is I am buying the property subject to the mortgage staying in place. I ask him, does that make sense? He goes, of course it does. So I say to him, what happens right now is what I calculate is I look at how much equity you have based on the current value of your property. Now, if I come in with a cash offer, I'm going to buy your property for $570. I know it's a lowball offer, but also understand that this is kind of right before the market shifted. I wanted to make sure that I was, protecting my base, so to speak. And I said, it's going to be a lower value. It's going to be a lower offer, but you get to move on and you get to just, sail off into the sunset, literally to Germany. The other offer I'm going to give you is I'll give you that $60,000 down, but I'm going to buy this property from you for $750,000. Okay. That's a lot more than 570, but I'm going to buy it at 750, but I'm going to get you the $60,000 down you need right now. And I said, do you need monthly payments? Like, you've got a good job. You're in the military. You're a contractor. Like, do you need monthly payments? And I said, if you need monthly payments, I'm going to probably have to bring that price from 750 down a little bit lower. But if you don't need monthly payments, I can give you a higher purchase price at the end. He goes, I don't need monthly payments. I've got a good job. So I said, okay. Then in 10 years, what I'd like to structure is that I'll give you $60,000 of your equity today. And then in 10 years, I'm going to pay you the remaining $240,000 of equity you have. Now his mortgage was 450. So 750, take away 450 is 300, subtract the $60,000 down. So 240. So basically in 9 years at this point, now we're going to be there. So in 9 years, I'm going to be paying the seller $240,000. The property right now, as it currently sits, is probably closer to being worth already about 750 to 800,000. I haven't run the comps recently. It's safe to assume that based off of just average appreciation in the next 9 years, that this property will easily be well worth over $1 million, 1.1, 1.2, something to that effect. So let's just round down. Let's just be conservative. So $1 million in the next 9 years. If I wanted to sell that property, if I wanted to sell this property, I could sell it for $1 million. Now think about this, $450,000 in principal or in mortgage balance. What's that mortgage balance going to be in the next 9 years? Can we safely assume, let's go from 450 down to maybe 350, somewhere around there? So that's an additional $100,000 of equity. And again, this is conservative. I think it would actually be a little bit more, but $100,000 in equity plus the $250,000 difference between 750 and 1 million, that's $350,000 from this deal minimum that I'll make. So, and it's a 2.27% loan that I took over.
Okay. So was the ability to assume his loan predicated on him being in the military? Like I've heard like the VA loans are assumable. Is it, or can you structure this with any type of loan?
So let's clarify something. I did not assume this loan.
Okay.
Okay. Assuming a loan, the definition of assuming a loan is that you are now qualifying for that loan. You are going to the bank and you are saying, hey, here's my credit. Here's my income. Here's who I am. Now approve me for that loan. That's what assuming a loan is. This is not assuming a loan. This is a subject to transaction. So the deed transfers to me, but the mortgage stays in the seller's name. So the seller holds this mortgage. The seller, the mortgage is on their credit. It's sitting on their shoulders. If I don't make payments, it actually damages the seller, which I've never done before, but just saying like, that's the risk that they're willing to take. If they didn't want to assume or let me take over the mortgage, then I would not be able to give them a higher sale price for their property. But them providing me that 2.27% loan allows me to make this. Now, originally I was going to make it into a rental. And then I'm like, nah, I'm just going to move into it and live there. But if I had to pay higher than 2.27%, this property wouldn't cash flow.
Oh, so are you renting out part of this?
No. I mean, technically speaking, I guess you could say my business rents out the basement for the studio. But no, like if I chose to rent this out, then anything over the 2.27% wouldn't cover what the rental rates are in this area.
Gotcha. Awesome. Wow. Awesome. So what other types of deals? Can you give us some flavors on what types of deals you've done recently?
I mean, see here, we closed. Well, a lot of ours are fix and flip. So we do a lot of that kind of stuff. Other creative deals, for example, are basically the seller wanted his equity up front. And I said, I can't do that. It's not going to cash flow. If I gave you, if I gave you $60,000 of what you want, I gave it to you up front, this deal would not work. But what I can do is I can't afford to pay you $10,000 right now. And then I'm paying him an additional $60,000 in the end of 5 years. And right now that property is giving me about $400 net per month. And so in 5 years, the property right now, I think it appraised for $550. And in 5 years, that same property is going to be closer to being worth about $700 or something like that. The good thing and the bad thing is that the good thing is that the bad thing is that really I'm not getting a lot of cash flow until we can raise rents on these properties. Mm-hmm. So the very first year, we might see a few $100s per property in net cash flow. Some of them actually might even break even. But over time, over 2 years, 3 years, 4 years, the way that the principal pay down and the way the appreciation works, each of these deals are worth well over 6 digits.
Awesome. Someone might be hearing this and thinking, yeah, this sounds awesome, all this stuff. I heard the term bird dog for the first time from one of your videos. Can you tell what a bird dog is and how someone might get into this?
Well, you know what? Let me come back to the bird dog. I just realized we have a property under contract right now that's interesting. It's a property that's about 100 yards away from Solitude Ski Resort. It's a ski in, ski out property. And the seller wants 10% down, which is typically a little bit more than I would normally carry. That I'd normally be good with. I typically want to buy about 5% down, but he wants 10% down and he'll carry 2.25% for the next 15 years for the remainder of his equity. And this is a property that's owned free and clear. In addition to that, he'll actually delay payments by 6 months. So for the next 6 months, we will not have to make any payments to the seller. We can make this into a functioning Airbnb. On the low end, this is going to be about a $15,000 a month Airbnb. On the high end, if we do luxury on this one, it can be about $25,000 a month. And so that one we just got under contract last week. And so right now I'm working with finding a partner that will operate the luxury Airbnb just because I don't like those distractions. But yeah, we come in with 10% down, fix it up, furnish it, get it rented, and there you go. So the play on that one's probably going to be, we're going to fix it up just to be like a normal operating Airbnb, not luxury. Just get it there, paint, carpet, get it kind of fixed up. Run the numbers for basically the remainder of the winter. We don't have to make any payments to the seller for 6 months. And then come springtime, that's when we're going to be, once the snow melts, we're going to come in and fix up the property, make it luxury and make it a lot better for the following season.
So just to clarify, you said that person already, that he owned that free and clear.
Yep.
And so you'll be making payments to him in 6 months.
Exactly. Awesome. So I just wanted to add that one in there. So anyway, back to your point about what a bird dog is. Bird dog, really basic ways of just looking at it is like I have bird dogs every day bring me potential deals, right? So like I've got 3 people that just text me in the last hour that say, hey, Jeremy, I've got a property right now. I know the owner or the owner is my brother or something to that effect and say, hey, would you be able to help me with this deal? And if I get the deal under contract, then they get a bird dog fee. I also hold their hand and I kind of walk them through the entire deal from start to finish so that they get to have a little bit of an experience and they get to learn how the deal is done. Like ideally, the term is like, what is the tuition of life? Well, partnering with people, that tuition of life is a lot cheaper than having to make mistakes on your own. So, and when you're dealing with creative finance, paperwork is very, very, very important.
Have there been any specific resources that you've really leaned on or something that got you going, certain books or other resources?
I mean, there's a lot of books out there, but I've worked with a lot of mentors. And I guess you could say one mentor specifically, and he's a great friend of mine, is a guy named Pace Morby. Pace Morby is kind of like a nationwide influencer on creative finance. For me, myself, I started learning about creative finance. So Pace Morby, basically when I started getting into creative finance, that was, 10 years ago, I started dabbling in it, learning more about it, but I was also doing a lot of wholesale. And then when I moved out here to Utah, I was in Los Angeles prior and when COVID hit, I moved to Utah. That's when I really got heavily into creative finance. And so Pace Morby has a mentorship called Sub 2, short for Subject 2, obviously. And I'm one of the leaders within that community. I'm one of the coaches within that community. I like helping students within that community do deals. And so that was a major resource. And about 3 years ago when I joined, it was it was a very small community where we worked with each other. We networked with each other. We did Zooms together all the time. And now it's grown out to, I think it's a little over 11,000 students.
Wow.
So there's a lot of creative finance that's becoming popular now.
Awesome. Yeah, I've definitely heard of Pace. So cool.
Yeah.
Well, as we're winding down, Jeremy, I like to ask everyone, what is the best and worst personal finance advice you've either heard or received?
Oof. Okay. The worst, I don't know about best. I don't know about best because other than, okay, no, here we go. Ready? Best.
Sure.
Focus on one thing.
Okay.
Focus on one thing and get really damn good at it. All of the biggest entrepreneurs, they focus on one thing and they get damn good at it. In the world, the entrepreneurial space, we naturally, visionaries typically, there's visionaries and there's integrators. I'm a visionary, so I see the future and I want to grow. Integrators are really there to stabilize a business and create the processes behind that business. Integrators can very easily put on the blinders and only focus on one thing, but visionaries, we get shiny object syndrome very, very easily. So advice I got from a few different mentors early on was focus on one thing and get really damn good at it. So I'd say that has brought me a lot of success by focusing on that. And I'll even say here, I'll admit, creative finance, I wish that I didn't have it up here, because creative finance by itself is a shiny object, because there's 1,000 different ways to exit a deal with creative finance. There's not just one. So sometimes I wish that it was only a cash deal. I wish it was only cash, because that would make my streamlining of my acquisitions and my dispositions much easier. But because I do have creative finance on my tool belt, that slows down the process. But overall, again, back to my point, is focus on one thing and get really damn good at it.
Awesome.
The worst advice I got was listening to a real estate agent. And this was back in 2012. I didn't get into this, but I'll really quickly touch on it. 2010, I was in a really bad motorcycle wreck. And so I was disabled for about 2 to 3 years. I had some money saved up. I was on disability. I wasn't going out, eating food or anything like that. So every disability payment I got just went into a bank account. Okay. So now 2012 rolls around. The market, if you remember the real estate market, that was when it started to climb again. Okay. We were out of the recession. Now it's going back up. And I said, I want to buy a property. I want to get into real estate. And because I was out on disability, I had not one, not two, but 3 agents tell me, you can't buy a property. You've got the cash, you've got the credit, but you don't have the work history because you've been disabled. Looking back at that now, the number one lesson that I got from that is, don't take no as an answer. Seriously, don't take no as an answer. If somebody tells you no, chances are that there are 1,000 different other opportunities behind that no that can make it into a yes. Since that point, since 2012, I have had conversations with thousands of agents that thought they knew more than me, and I've proven them wrong. Agents think that subject to is illegal. They think that that's not real. A lot of agents, and I'm not just bagging on agents in general. I'll throw agents into the category of business professionals that stay within a very small bubble, but they don't understand the rest of the world, right? They're mentally in a small town to where they don't know what the big city can actually offer. And so they're like, no, this is what life is. I'm not going to accept any other choices or any other options. This is what I know, and I'm sticking to it. So thousands of agents have been proven wrong. So great example is I just got a CE course, continued education course, approved here in Utah, that now I am teaching agents all about creative finance. And the reason I did that was primarily for my students, because when my students are talking to agents about deals that are listed on the MLS and they're trying to offer subject to and creative finance, and those agents tell my students that they're wrong, that this is illegal, that this is not allowed, and just basically shut them down. Well, now my students can say, hey, guess what, dumb shit? There's an actual CE course that is insured, that is structured with attorneys, that is approved by the National Association of Realtors, and they will give you CE credits to actually get your hours needed every single year. So don't take my word for it, but here's the link to the CE course. Now shut your mouth and go there and sell me the deal.
An awesome solution to that issue you were
Right.
facing. Awesome. Well,
Yeah.
Jeremy, it's been great talking to you, provided a real lot of value. Why don't you give the listeners a handoff? Where can they go to find out more about you or get in touch with you?
Everything is at the Jeremy Davis. I've got a big focus on Instagram at the Jeremy Davis. However, I am making a shift over to YouTube, and I'm going to be posting all my content there. And I'm also going to be posting more long form content. So if you guys want to go to youtube.com/at the Jeremy Davis, THE, the Jeremy Davis, I'd love to see you there.
Awesome. Thanks so much, Jeremy.
Awesome, Jack. Thank you, brother.